Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that NQ held above the 44.35 HVN and Russell continued to hold above its HVN at 1250, which triggered a upside move in the S&P off of the prior close and support at 2080. So at this point, heading into the open, ideally ES actually holds above 83.5 to 85.5. That is pre-market support. On the upside, we had the 89 resistance level, which at this point has already been tested, and the next main inflection point and upside target is the initial resistance zone at 93 to 95.5. Now, if we're seeing some really strong buying on the day time frame, then we can go beyond 95.5 and test the 2099 high volume node and potentially the 2175 to 0275 resistance zone where responsive sellers can be active on first test. But for now, the idea is that short term, if NQ continues to hold above 44.35 and TF continues to hold up as well, then ES can hold above 83.5 to 85.5 for a move up to 93 to 95.5. That's the primary scenario, but we do have to understand that right now we are in a overall very two-sided market, and there's no very clear-cut trend in play. If you look at the larger time frame, you can see that the market has been selling off for the last 4 sessions, and now we're putting in a small correction here on the larger time frame. So for that reason, we can still get sellers active at resistance, and essentially that has been the theme, right? Every time we get oversold into support, buyers step in, but at the same time, we're seeing sellers active at resistance as well. So up at the initial resistance zone, 93 to 95.5, we can still get sellers active on first test, especially towards the upper edge of that zone. And from there, if we get a move up to 99 or 2175 to 0275, we can definitely expect responsive sellers to be active there on first test, and the 2175 to 0275 zone has potential to cap the upside and shut off the buying. Now, on the downside, in the event that we break below 83.5 to 85.5, we still have support at 2080. That still marks the prior close and the overnight low as well. So buyers can technically still be active there, but at that point we would have to reassess the market to see whether the other markets were still holding up and supported the upside scenario, or whether now we were simply kind of transitioning back into more of a bigger balance. So if we break 83.5 to 85.5, then it doesn't mean that we're bearish, but it would force us to just reassess, and we'd have to make that decision in real time. On the downside, we're going to use 76 quarter to 78 quarter as the bull bear zone, and as long as that zone is holding, there's still potential for buyers to step in, although it would certainly limit the upside view. And ideally, if the market is truly strong here and buyers are in short-term control, then we don't really want to see the market breaking below 83.5 to 85.5. So ideally, if the upside scenario is going to play out and we are going to go up to 93 to 95.5, then we actually hold the 83.5 to 85.5 zone and just launch from there. But 76 quarter, 78 quarter would be the final spot where buyers could technically still step in. Below there, the control would shift on the smaller time frames back to sellers, and we could get a move down into yesterday's low, yesterday's overnight low, as well as RTH low at 68.75 to 70.75. Now, given that the economic calendar is fairly light today, we don't necessarily have to make a huge move on the downside either. But the 68.75 to 70.75 zone is a zone that has been tested now a couple of times. So as we go back down into it, if we're exhausted into that zone, then it can certainly still provide edge. But at that point, since the sell side would be in control, we just have to be a bit more cautious on taking any long setups, because it wouldn't be a big deal for ES at that point to break and test the next zone at 63 to 65, where we can get some better buying. So overall, the idea is to look for ES to actually hold at support this morning, and at the very minimum, hold above 76 quarter to 78 quarter for a upside move. The 2089 resistance level has already been tested. We've already seen a response off of that zone. So at this point, if we go back up to 2089, most likely we will push through it for a test of 93 to 95 half. And, again, we can still technically look for sellers there, but it's better to look for sellers at the upper edge of that zone rather than right at 93. But 93 could be used as a profit target. So on the exits, we're going to be a little bit more aggressive. But if we're shorting a strong upside momentum move, then we have to be a little bit more careful because then we're putting risk on as opposed to taking risk off. So that is really the main idea on the day time frame today. Keep the bigger picture in mind that overall we are in a very neutral type market where we're seeing activity from both sides, and for that reason we have to continue to be very flexible with our bias and again not get locked into a single view. So if we notice that NQ is not holding its overnight low and 44.35, then we have to adjust our bias because ES could also head down to 68.75 to 70.75, and we don't want to ignore the short side and focus too much on the scenario of ES going up to 93 to 95 half. We do have to see those signs in real time that support that idea. So we should be seeing positive readings on the advanced decline. Ideally, we don't want to see too much negative momentum, and really we would need to see positive momentum in order to go up to initial resistance. We would have to see a rising advanced decline line ideally in order to go up to initial resistance and possibly even higher. So in real time, we do want to look for those signals that are supporting the scenario. And if we're seeing the complete opposite or extreme weakness or unusual weakness, then we have to adjust and adapt accordingly because this is so far a fairly two-sided market. But Russell so far is holding up quite well, and Q is holding up okay. So at the moment, the upside scenario still continues to be in play, and as long as 83 half to 85 half holds, the focus will remain on the upside scenario. But then if we start seeing some clear-cut warning signs, then we'll have to adjust. But until then, the primary scenario is going to be for ES to hold pre-market support for a test of 93 to 95 half. So those are the main ideas heading into the open. Let's see if the buy side can maintain short-term control here, and we'll take it from there.